Hey everyone, it's Robert Weinberg, your mortgage advisor and financial coach. In today's lesson, I want to talk about clear to close. What's next? If you've made it this far, your loan is cleared for closing, and what that means is that the underwriter has come back to your loan officer and said, we've cleared all of the prior to document conditions, and we're ready to release closing documents to the title company, as well as get the closing scheduled. So at this point, you really are about 90 to 95% of the way done with the loan process, but you're not done just yet. And there are some really important things that need to happen between when you're cleared to close and get to that closing table to make sure everything finishes off smoothly. So first of all, let's talk timelines. So once your loan is cleared to close, within 24 to 48 hours of that being issued by the underwriter, typically the closing department or the loan document department at your lender is going to start working on the closing documents for your transaction, and they're going to start doing all the final tabulations on how much money you need for closing and all of the different adjustments that need to be made to come up with that number. So what the government has done now is they've put laws in place to make sure that you have ample time before the closing to know the numbers so that you're not caught literally the day before closing or hours before closing, which used to be the case, figuring out how much money you need and being really sideswiped at the last minute. So now with the current rules that are governed by TRID, T-R-I-D is the name of the law, you need to have the closing disclosure acknowledged, and you need to get those numbers at least 3 business days before closing. So for example, if you get and acknowledge the closing disclosure on a Monday, you could close on Thursday. So the first day is the day that you acknowledge and sign the closing disclosure, and then day 2 is the day after that, and then day 3, and then the day following day 3 is the day that you can close. So again, if you receive and acknowledge a closing disclosure on a Monday, you can close as early as Thursday. If you don't receive and acknowledge the closing disclosure until Tuesday, then the earliest date that you can close is going to be on Friday. So just keep that in mind. That's why getting these things done quickly and properly is so important, so there's no delays with your closing. So as I was just talking about, the preliminary closing disclosure is when your closing department at your lender is going to go back and forth a couple times with your attorney or closing office, and they're going to verify all the fees that everyone's charging, the realtor commissions, all the different things that go into the transaction, the adjustments from the seller and whatnot, and they're going to come up with a cash to close number, which is going to typically be how much money you're going to need to bring to closing, or if you're refinancing, it may be how much money you're actually receiving from the closing if you're doing a cash out refinance. So as I mentioned a minute ago, you do have to receive and acknowledge those figures at least 3 business days before the closing. The next step is going to be, once you do that, your loan officer or mortgage advisor will discuss that with you. Make sure that you acknowledge it through an e-signature system typically, or you'll meet with your lender at their office, or they'll email or scan it, fax it to you, where you can sign to say that you received the numbers and send it back. That's what the closing department needs to release your closing docs. So the step from there is going to be to get your money ready for closing. So most of you watching this are probably going to be purchasing a home, and you're going to need money to do that. So they will tabulate how much money you need, and they will, meaning your title company and closing department, will deduct off any deposits that you've paid, any appraisals that you've already paid, any fees that have already been paid prior to the closing will be accounted for, so you won't be double charged on those, and they'll credit you for those on the closing disclosure. So once you have that closing number of how much money you're going to need, you need to figure out with your attorney or title company how they want to receive the funds for the closing. So you either are going to wire them the money the day before the day of closing, or you're going to bring a cashier's check to the closing from your bank, which will be made out to them in the exact amount that they'll need for the closing, and then they'll pool your money with the other money in the transaction that's already there and do all their final disbursements to the seller and whatnot. So again, you want to figure out whether you're going to wire or bring a cashier's check to closing. If you're wiring the funds, you'll get wire instructions of where to send that money, and you'll show that to your banker. Just a side note, if you're wiring, there's been a lot of fraud recently with hackers hacking people's wiring instructions in email. So you will want to verify with your mortgage advisor and or the title company directly the wiring instructions of where you're sending the money to make sure you're sending it to the right place. If it's a cashier's check, then you just go to your bank and you will tell them that you need a cashier's check written for a certain amount out of your account, and you'll bring that money to closing. The next thing is going to be satisfying funding conditions. Now, most of the time, this isn't going to be an issue, but it is worth mentioning. So sometimes not all of the I's can be dotted and T's can be crossed, so to speak, prior to the clear to close. So there may be one or two small items that need to be done prior to funding. Maybe it's a credit supplement on an account that you opened. Maybe it's a letter of explanation on something minor that showed up on your final credit report the underwriters pulled. But you will want to discuss this with your mortgage advisor or loan processor to make sure that any prior to funding conditions are handled before the closing, so that there's no delay or last minute panic when it comes to funding your loan. Closing day. So this is when you're going to go to your attorney, title company, real estate office, or wherever the closing may be, and you're actually going to sign all the final mortgage documents. This is the contractual agreements that you're going to sign that make you responsible for this loan and finalize the whole loan process. So that's closing day. Then what's going to happen is the title company, closing office, real estate office, they're going to take all of the documents that you've signed along with the seller. They're going to then electronically send those over to the funding department at your lender. They're going to make sure everything is signed correctly, dated correctly, there's no signatures or initials missing, and then at that point they're going to authorize the funding on your loan. Now the actual funding is exactly what it sounds. It's when they fund your loan. It's when they actually disperse the money out to the sellers or the different parties that are making money from the transaction, real estate agents, etc. So that's when the actual funding is done. This is why I said a minute ago, if there's any funding conditions that you need to be concerned with as the buyer, you want to get these handled ahead of time. Otherwise, they're going to come up at the last minute and the funder's going to say, hey, what about this document, or why are we missing this? And they're not going to fund your loan until those are satisfied. You definitely don't want that. And then the last step is, of course, the post-closing follow-up. So after everything's done and you've got the keys to your house, which you'll typically get on the closing day or the next day if you close late, then you're going to have your post-closing follow-up. And not every company does this, but I do it religiously with my clients, which really just comes down to doing an ongoing review. I do a first payment follow-up with my clients to make sure that on the first mortgage payment, they know where to make it. There's no questions or concerns about anything. And then on an ongoing basis, you want to do at least one annual review on your mortgage to make sure you're in the best loan product for your particular needs. So I hope that that helps. I really appreciate you watching this. Hopefully that gives you some good insight on the clear to close and what do you do next after the clear to close. You can go ahead and follow me on social media, Facebook, Instagram, Twitter, LinkedIn, and subscribe to my YouTube channel, Robert Weinberg, Mortgage Advisor, NMLS 80786. You'll want to click the subscribe button on there or on Instagram TV so you can subscribe and get additional videos when we publish these out. As always, hope it helps, and I'll talk to you soon. Take care.